So sorry about the delay. It has been one crazy day. So, first off, I want to say thank you guys so much for being on this live webinar. My site had I had to update a few things. So, it's crazy because I used it earlier. Everything was just fine. And now it didn't work so well. So, I do apologize. And the link that I gave everyone, it seems as if that was sent to the test page. So you guys should now have the updated link. So thank you guys so much. All right, so let's jump straight into this. Give me 1 second here. All right, hold on 1 second, guys. All right, sorry about that, guys. Hold on 1 second here. All right. So hopefully you guys can see the little hand that's moving there. Don't worry if you guys are, if you missed this, the live version. Sorry for the technical difficulties. If you guys have ever watched any of my old webinars, I never had issues like this before. But Google's changed their platform a little bit, so it took me a while to get used to it. So I said, okay, all right, I'll figure this out. So let's jump straight into it. So the very first one we're going to look at is a FICO credit report. Okay. And the reason why I'm going to go this route is because this is the credit report that a lot of people don't necessarily, first off, know how to read. But a lot of times we get so used to just using all of these other platforms out there. For example, you guys may be used to, of course, Credit Karma, CreditWise, Wallet Hub, all of that stuff, right? And there's nothing wrong with that at all. But I most definitely want to make sure that you guys know how to read what most lenders are looking, what they're looking at. 90% of lenders use My FICO, okay? That's what you see in the corner, FICO. That's the name of the company, Fair Isaac Incorporation. They've been doing credit scores and reports since the late 1980s. And because they've been in the game so long, most lenders trust them. But credit scores are starting to take a shift, and they're starting to do what they're pretty much what all the credit score changes. You guys can always see that video on my YouTube. But either way, this is what lenders use the most. So we're going to start off with this one. So now this client in particular, as you guys can see here, they are 662. This is back in January. And I thank this client for letting me use his credit report. And but either way, this is Experian. Now, it doesn't matter if you go with Experian, Equifax, TransUnion, or if you buy all three. It will be I'll put the link down at the bottom. If you know everything I talk about, I'll put a link down at the bottom. Right now, there's probably no links, but when you guys come back, I'll be able to edit it and go back down. And you guys will see all the links down at the bottom. So, but either way, I know we're kind of pressed for time, so I'll make sure that I go over the FICO one right now. So, either way, you guys can see right here the score is a 662. Okay. First off, you see right here where it says FICO score 8. Now, FICO has come out with the FICO 9. They came out with the FICO 9 about a year and a half ago. And now they're working on what they call the FICO XD. X is in X-ray, D is in, I don't know, David. So either way, I say that to say that the reason why this is the only one that's available on their site is because this is what most lenders are using. You're probably like, okay, how many credit reports are actually out there? Just know that when you go to the FICO site, they're going to always give you the one that's used the most. So where it says FICO score 8, that's what most lenders are still using to this day. Okay. Now, this is where it says your FICO. It kind of gives you a range what your FICO score is. In this case, his is fair. And then once he gets to about 700, 710, so around there, it's going to be good. Then very good, around that 750, 760 range. And then, of course, you know, exception. Let's use about 760, 780 or higher. All right. Then it says, now this is his own personal side. It just says payment history, your history of paying bills on time, your amount of debt. This shows very good. The length of credit history, it shows very good. And of course, it shows the amount of new credit. It says good. Okay. So now this is where a lot of confusion comes. It says, wait a minute, my score is a 662, but why in the world am I seeing all these other scores? And let's get straight into it. Okay. At let's say if he was to go get a mortgage, okay, they look at what you call the mortgage FICO score 2. Okay. Now, some lenders, as I want to show you more scores as well, but this is commonly used in mortgage lending, the FICO score 2. Okay. So now when he goes go get, let's say, a pre-approval for a mortgage, he's going to be thinking, okay, my score is a 662. That's what my Experian is, right? Because it says 662 Experian. This is your overall score based on your overall report from Experian. It's not an average, it's just the overall. Okay. So what this is that when you look for a score that has to do with mortgage lending, it's on a slightly different scale. As you guys can see, the scale's a little bit different here. A lot of people don't notice that. Okay. But either way, the reason why that scale is like that, okay, is because it takes a look at the same information that's on, in his case, in his report, it takes a look at what's on your report, but it says, okay, if this guy was to apply for a mortgage, what things would matter to the mortgage industry the most? And that's how they calculate the score based on him if he ever wanted to try to get a mortgage. Now, you guys are going to see later down the line, when we go further into it, he does not have a mortgage, okay? Not in a negative way, but you're probably like, okay, well, how does he have a mortgage score if he doesn't have a mortgage? Well, this is if he was to try to get a mortgage. Now, when he later gets a mortgage, this score will change. It won't go necessarily up or necessarily down. It all depends on how the algorithm is going to be. But it's just saying, hey, if he was to go with a mortgage based on what's currently on his credit report, we feel that we would feel comfortable to say that his score is right here. And that's what that's still going to go by if he was to try to get a pre-approval for a mortgage. This is the exact same score you would see if you want to get a pre-approval for a mortgage. Okay. Now, auto lending. This is where it gets fun. Okay. A lot of people always ask the same question. I went to the dealership, my credit through Credit Karma. I even ran my credit through FICO. This is not me in general. I'm just saying what stories I normally hear. And they say things like, well, Calvin, when I was looking at my score, that's not the score that I saw when I got to the dealership when they told me my score at the dealership. I said, well, that's because at the dealership, most dealerships use the FICO Auto Score 8. Okay. So in this case, if he was looking for a car, then he would be at 677. Now, you're going to see on his report that he does have an auto loan, but he hasn't had an auto loan before this one in like over 7 years. So technically he didn't have one. But in order to get an Auto Score 8 score, it pulls certain things from the report and says, okay, if he was to get a car, this would be his score, and then that's how it's generated. Okay, so now, I know it's like, and this is why I had to do this webinar, because there's so many scores out there. People are like, okay, what's the real score? What you guys are seeing now, this is what people are going to be using. When you go to any dealership across the nation, it's a 95% chance they're going to be using this right here. FICO Auto Score 8. Not the 2, that's the much older version. And it says right there, older version for auto lending. Then, of course, it's mortgage lending right here. Now, can mortgage companies change what they're using? Can dealerships change what they're using? Absolutely. But they've been using it for so long, and that's where Credit Karma is trying to change the game. And the algorithm that comes from Credit Karma, which we'll get to in a little bit later, that comes from the actual, it comes from Vantage 3.0. And so Vantage 3.0 is trying to come up with newer ways to score people. But again, trying to get them to change their ways and habits is very difficult, especially in the banking industry, because banking is what? It's been traditional for so long. I'm not saying that it can't happen, but you're talking about, there's a lot of changes that a lot of places got to make. Okay. Hope any of this is helpful. All right. So now, bear with me here. The other, let's see, I got to turn this other one. Yeah, so give me a moment here. Don't worry, it won't take long. So you guys can see what his other score came out to be. So give me a moment here. All right. All right, you guys will be seeing this like in a hot second. And this is going to be document number 2. And you probably like, well, how come you didn't do this before? Man, I thought I did, to be honest with you. All right. So let's see here. View. We're going to rotate and clockwise. Perfect. All right, so now I'm going to switch this over to this view here. All right, don't worry, it won't take long at all. Oh, wait, I almost muted myself. All right, so now, you guys can't see anything, don't worry. All right, so now as you guys can see, move that out the way. I'll make this a little bit bigger, 100. All right, perfect. So now as you guys can see here, where it says 671 FICO bank scorecard. I'm sorry, read that all wrong. FICO bank card score 8. Okay. Now what this means is that if he was looking to get a credit card, what would his score be? Now it can range anywhere between this and this. Keep in mind, it'll show older version predominantly used for credit card lending, older version used for credit card lending. Okay. But right now, this is the most recent version used by most of the big corporations. You know, Capital One, Discover, Citibank, yada, yada, you name it. Okay. And this is what they're looking at. So when if he's applied for a credit card, this is the score that they're going to see right now based on the new algorithm. Okay. These are old, so it's not really no use of me talking about it. But on the right-hand side here, this shows like how they came up with this score. And it says, hey, you've had a public record collection on your report, which is why your score is that. You have few accounts that are in good standing, which is why your score is that, so on and so forth. Okay, let's move on. Now, this right here is the newly released FICO score 9. Now, you're probably saying, wow, that's a big jump. I mean, if you guys look at that, let's see, what's that say? That's 671 right here. And then the same exact, I mean, this is the new score 9. But again, the 9's been out for over a year and a half. Question is, who's using it? So now, as you're asking yourself that same question, a lot of the credit score changes that are coming out are only going to be for Credit Karma only. So it's going to make you feel good, right? But it's just like, you know, if you wear a certain size clothes, and then if you go to one place, they tell you what you are and what you probably are at every place, right? And it's like, I know that, but I really want to hear that. And then you go to another clothing store, you know your size, but they give you a smaller size, even though it fits perfectly, but the number is just different from somewhere else. It makes you feel better. I say that to say that's what FICO's doing, is that it makes you feel a lot better, but no one's using this algorithm. Okay. Now you're probably like, well, how do I know all this? Well, for one, I'm FICO certified. See, a lot of people don't know what FICO certified is. I don't have time to go over it. Just know that I know what I'm talking about if it has to do with FICO. They used to have a certification course not long ago. They don't offer it anymore. And how it works is that they taught us exactly how their algorithm works. It's pretty cool because now with that knowledge, I now know that how to show you guys what to expect and what everything's going to look like as you guys start doing business with lenders and such. And a lot of people don't necessarily talk about FICO, and the reason why a lot of people don't necessarily talk about FICO is mainly because you have to pay for it, and it doesn't suck. I mean, somewhat, but I mean that's just how life is. Sometimes you got to pay for stuff, and it's not the end of the world. But now everyone's trying to come out with free scores. There's nothing wrong with free scores, but again, what good is free if nobody's going to use it? And again, there's nothing wrong with it. It's just that, we just have to get more people on board. Okay. So either way, I'm now going to switch over to the third page here. So give me a moment. I appreciate you guys being with me this evening. I know you guys can be anywhere in the planet, but you guys decided to be with me. So I appreciate it. All right. So now, let me move this thing. This is like so everything. Okay, give me a moment. All right, now it won't let me move it. All right, perfect. All right, so now I'm going to go ahead and jump off that screen. Oh, no, wait. Okay, good. You guys can see anything. It's coming. All right, so now this will be page 3. Okay, so now it goes a little bit deeper. Okay, let me just make this a little bit bigger here. Okay. All right, so now it says, now number 1, it says you have a public record or collection. Now you guys are probably saying, okay, this I can actually read, okay? But at the same time, some people don't know that this stuff plays a huge role. This is not just telling you what's wrong with your report. It's actually it's actually putting it in from what's most important to least important. So the most important thing on his particular report is that he has a public record or a collection on his report, okay? And it says how many does he have? He has 2, all right? And it says only about 1% of FICO high achievers have a collection listed on their report. So now when you see that, it says, oh, wow. Okay, so that's good to know. Now, that doesn't mean that you can't get a higher score. It's just saying that 1% of people that are high score achievers, which, by the way, a FICO high achiever is someone that has a 780 or higher. Okay, so that lets you know that. All right, and it just pretty much breaks down, what a public record is. Then it says you have few accounts that's in good standing. FICO high achievers have an average of 6 accounts currently being paid as agreed. Okay, then going down to list number 3, the remaining balance on your mortgage or non-mortgage installment loans is too high. That just means that, of course, it means that he just got it, okay, which in this case, I know it's a car loan. So which you guys will see a little bit later. And it says right here, FICO high achievers have paid down an average of 39% of the principal. So this is lets you know that as you start bringing down your debt, even though this is, because everyone has their own definition of what's good debt and bad debt. And I mean, you can still have, some people are like, well, is there such thing as good debt? In my opinion, it is, especially if you have, let's say, like, real estate property or something like that is making you money. Let's say if you own, like, let's say a 2-flat building and you have a mortgage on it, but you're also making profit on it as well. So in that case, it would be good debt because it's actually making you money. If you guys want to look more into that, you can always go into Robert Kiyosaki, and I'll put the link down there for those who need to be updated on his book that he just wrote. So it's pretty cool. But either way, you have, it says right here you have a short credit history. The reason why that says is because even though this guy, he's a little bit older, like he's in his 50s, the problem is that all of his accounts in the last 7 years have fallen off because they were older than 7 years. So this is where, of course, you need to talk to someone like myself, where you can actually learn how to actually build your credit report, okay, the right way. Because a lot of people, what happens is that as they get older, like semi-retired, their credit starts to, because again, the house is paid off, the cars are paid off, so they're not really borrowing money and stuff like that. But there are healthier ways to have a healthy credit report because your car can get totaled. You may want to help out a family member by co-signing or something like that. You may want to refinance your house. A lot of different things can happen, but credit does play a role, okay? And it says your oldest account was opened 20 years ago, and it says FICO high achievers opened their oldest account about 25 years ago on average. That's crazy. That's a long time, right? And it says most FICO high achievers have an average account of 11 years or more, okay? So let's keep going. Then it says the positive stuff, okay? And it says what's helping you. And as you can see, only 2 things are helping them. You have no missed payments on your credit report, which is good. It says 90% of people in the high achievers have no missed payments. Then it says you've limited the use of your overall revolving debt. He's at about 4%, which is, of course, I keep my clients well under 10%. So, okay. So now you're probably like, well, again, this is stuff, Calvin, that I know. But here's the deal. You got to make sure you know how to read it, because just because it's there doesn't necessarily mean it is accurate. Okay. So let's see here. Now I'm going to go ahead and go to page 4. All right. Now page 4 and then page as we keep going, this is more so just letting you know exactly what, but I don't want to skip over anything because everyone's coming to this at a different angle. Okay. And I want to make sure I cover it all. But of course, if I'm boring you, you can always hop off. You can always come back later. But I want to make sure that I actually go over all of this because everyone's situation is completely different. So, okay. Bear with me here. I am turning this. Wait, hold on. It's like upside down. Now give me a moment. Okay, there we go. All right, let me close it out. All right. So now let me just make sure that you guys can see this. Okay. Oh, good. You guys can. Oh, sorry. Okay. All right. You guys can. All right. So now let's go ahead and do this. 125. Too big. There we go. Okay. All right. I like doing this webinar stuff. So it's been a while since I've actually done a webinar. I've been actually just doing just videos because now the software keeps changing with Google and I have no problem keeping up with it. But it's okay. This is like, okay, just trying to keep up now. So, but no big deal. But it's cool though because you guys can see the full screen of things. So it's pretty cool. So these are 125. I think I'm okay, cool. No, wait, let me make sure you guys can read it. All right. So based on where your score is, what type of interest rate you may qualify for if you were to go with a 30-year mortgage. Okay. Now keep in mind, this is actually probably about a conventional mortgage there. Then of course a 15-year home equity loan, or what type of interest rate he could expect. This is just based on rates. Again, this is just random stuff just from lenders. And it just says, informal research services. This is just based on the average of what lenders were doing at that time. Keep in mind, this was back in January. Okay. Then you have a 48-month auto loan, which just so you know, guys, I come from the automotive industry. Most auto loans we did was like 72 months. Okay. So 48 months, a 4-year loan was rare. I mean, it was rare. So, but either way. Now, if you had an older car, I don't say older, but like, if it was like maybe 6 years old or something like that, then they probably went, 48 months or maybe like a car that's under like 12 grand, maybe, maybe 13 grand, something like that. They may do 48 months. Either way, I don't want to go talk about cars all the time. All right. So this is pretty much let you know, based on where your score is, what type of interest rates you should expect to see. This is really good because a lot of people just go into the dealership or they go into looking for a home and they have no idea why the rate is what it is. They say, oh my God, my rate is so high. Well, if you'd have took a look at this prior to, you would have known what your rate would have been. Okay, so you can't get mad at anybody but yourself. Okay, and this breaks down a lot of stuff, guys. So if you look at especially looking about a house later down the line. So okay, then it just shows you why, where your score is right now, and the reason why you're going to get the rate that you're getting is because this is the amount of risk that a company takes when they're letting you borrow money. Okay, so I've heard people say, well, my credit score is good. See, that's the thing. If you are around people with phenomenal credit, let's say in this green range, then you say, oh, my credit is good. You may put yourself around this range right here. Okay, but this is okay credit. See, the problem is that people confuse getting approved with actually having good credit. That's a big difference. Okay, so you can get approved right here, but you're going to pay, 25% interest, 30% interest, almost borderline illegal interest rates. You got to give a blood sample, all type of stuff. That's what I was read for blood sample. Not kidding. So, but either way, you got, this is your amount of risk, and this percentage is the percentage of people that actually default, which means that the percentage of people that are actually late on something. It's a possibility that person will be late or about 13% of the time if the score is about right there. And I say that you will be, and it's in the average. Okay, that's good to know because a lot of times people need to understand that a lender takes a lot of the risk. A lot of times people say, well, you know what, I want to pay a certain amount on whatever. So okay, cool, but at the same time, here's the deal: if you've never paid someone on time, I won't say like on time ever, but if you never pay someone as you should, you got to expect for them to understand that that there's going to be a lot of risk being taken. Okay, so I hope that helps you guys. All right, now you guys can see it like I do. Let me go ahead and change this view here, clockwise. Okay. Hope you guys can see this stuff because I would hate to do this again. But if so, I don't mind. All right, so this is now this right here, as you guys can see, I blocked a lot of stuff out. I left the address there though, so you guys can see that this person is real. So either way, let's see here. So of course, credit history, 20 years. Then it says your revolving open-ended amounts. It's just revolving debts, revolving accounts, usually credit cards, department store credit cards. Mortgages, he doesn't have one yet. Actually, he's going to be looking for a home pretty soon. So, yep. Let's see here. Total number of accounts of balances. Then it says collections is a flag. It just means that anytime you see a flag, that just means that something's hurting your report. And he's still a 677 even with collection. So we're still working on that. Okay. Oh man, that was too quick, right? Well, you know what? Okay, now on this left side, you guys can see here where, okay, your information will be there. The social's never there, just so you guys know. But it will show you like your date of birth, your current address, your previous address, and your employers. It'll show your most recent, and then of course the one before that, the previous. If you guys see some stuff that's outdated, again, you're probably like, well, I thought, because a lot of people think that, just so you guys know, for one, income is not on here. How many kids you have is not on here. Your marital status is not technically on here, but it will show like a name change. Okay, so just basic stuff. And just so you guys know, because I did a video on that too, how marriage affects your credit report. And you guys should watch that if you're not sure about it. But yeah, once you get married, in short, your debt does not combine. Your credit scores don't combine, anything like that. Okay. Otherwise, some people probably would second guess marrying certain people if that was the case. So, but either way, but yeah, so you want to make sure this stuff is is updated. Now you can always update this information. So I mean, I hate that it's called a dispute letter because technically you're not really disputing, you're more so updating. But either way, that's all you got to do. And then you got to sit in documentation because here's a problem. There's so many people lying, saying that accounts are not theirs, and they're putting fraud alerts and all the rest of this stuff. All right, no problem. But it makes things so difficult when you guys in the future try to get a home. A car is easy, but if you try to get a home and stuff like that, because they have underwriters, and this stuff has to be updated. Okay, yeah, I recommend it. Otherwise, it's gonna make life a lot difficult, and you don't want to go that route. Nobody wants to go that route. Okay, so let me go ahead and pull up page number 6. We're rolling through this stuff here. Okay, I don't know if I'm gonna have time for Credit Karma. We may do that another day. But I mean, the concept is the same, and it's gonna be the exact same. But I mean, I'll make sure I do another one probably in like a week or so. How to break down a Credit Karma report. I want to do this because number one, I want to take you guys time up too much, especially with the technical difficulties I had earlier. So probably like, Calvin will just shut up and just keep going. All right, I'll just shut up and I'll just keep going. Let's see here. You know what? I'm gonna skip that one because This is more so a duplicate. So I'm just gonna go ahead and just, yeah, print this one. This when I print, but all right, page 6. There we go. Okay, let me open that up. Now, let me see if you guys can see it sideways like I see. Oh, you guys can see it sideways. Oh wow, that sucks. I thought I had to like switch it over. Now I know. All right. Okay, 125. Boom. All right. So now this right here, this shows you when the account was open. Okay. Now some people, now a lot of stuff is like in codes. Okay. Um, not code, but they're like abbreviated. So you can always Google stuff if you're not sure, because a lot of times stuff is abbreviated and you're like, what the hell is that? Now I know from just from history that this is Community Bank. Community Bank is a very big bank that a lot of people don't actually know about. They actually provide the financial funding for a lot of department store credit cards. Okay. And now, and it says right here, complete department stores, but you still don't know. Now, of course, he would probably know who this is. But I think so now a lot of days, nowadays they have a slash. So you guys may see Target slash TD Ameritrade. That's because they do the finance for them. Then you see Kohl's slash Capital One because they do the financing for them. So, but CBNA, you're going to see that a lot. You're going to see Synchrony Bank a lot. Synchrony Bank actually works with Google. So, give you a couple of plugs. So never mind. We'll keep going. All right. So as you guys can see here, he was an authorized user. Let me break this down real quick. You see how it says account holder, authorized user. For those of you who think that CPNs are like the coolest thing on the planet, here's the deal. Not CPNs, I'm sorry, trade lines. It's nothing wrong with the trade line. Just so you guys know, this entire thing right here, hope you guys are listening, this entire thing right here, like where you see, like for all of this, like everything I'm showing you right now, this is a trade line. Okay. Now I gotta clear some terminology up. A trade line is any type of line that you have on your credit reports that can help you build credit or can help you decrease your credit. Okay, your credit score. So in this case, he didn't pay for this. Okay, but this was someone that obviously, well, I don't know if he knew them or not, but they put him on a department store credit card as an authorized user. Okay. Now, in this case, this did help him. Don't get me wrong. The problem is why I bring this up is because some people are paying for trade lines. Well, you guys just ask somebody in your family for a trade. I mean, just say, hey, grandma, I see that you've been paying your JCPenney bill for like forever. I know you probably have never been late, and hey, would you mind add me on as an authorized user? That would help you guys to score. Okay, now I'm getting out free stuff, right? You guys never hear me say free stuff, right? No, I'm kidding. Everything on the pages there. So, but the reason why I bring it up is because there's nothing wrong with paying for a trade line, but I'm just saying, like, you guys can get your own though. I mean, like, look at this. This is a trade line itself. Some people think that, oh, well, no, a trade line is where you got to pay for it, right? No, if you get your own credit card or something like that, it's your own trade line. So, but what the hell do I know? So either way, the limit here is 2860. The largest balance was 3,300. So that means she went over the limit at one point. This is the thing. These are things you got to pay attention to. Is that when you're an authorized user, you can't control how this person uses this account. So when she did that, she actually brought his score down. He probably wasn't paying attention. Okay, and they closed the account. So of course they closed it back in 2007. It stays in there for no. Let's see. It goes by the date of last activity, and it would have been 7 years. So actually, yeah, this should have been like off like years ago. So either way, the reason why we didn't touch it simply because, well, it's good history. So moving down the list. All right, so you see here, same thing, CBNA, credit limit was 820. This person always went over. Oh, this is actually his. He went over too. All right, so moving on. This would actually be, now this could be like, this stuff can be disputed, but why do it? That's stupid. I've seen people dispute like some stupid stuff, like stuff that was helping them, I should say. I say it's stupid because, okay, come on, like you got to know that this is helping you. Or here's the deal. So much bad advice. People say things like, oh, dispute everything. That's stupid. I mean, this is good history. Why would you do that? Moving on. All right, so as you can see here, Capital One, it shows the credit limit and it shows, the payment history. You guys see the years and all that. Now this shows you, of course, date open, date of last activity, the loan type, the credit limit, the balance, the terms. You guys can read. And it just shows if the account's in good standing, things of that sort. Okay, that's page 6. Let's go to page 7. All right. I hope you guys are still with me, not to sleep. Hope you guys didn't fall asleep on me. All right, so let's see at page 7. You know, actually, I think I'm gonna have the opportunity to keep this on YouTube, so I may just do that. Yeah. If I could sue me. I mean, hey, no one cares. I have written consent from him, so he's fine. All right, so now let's fight. You guys can see that. All right. All right, so you guys can see here that he has a Chase card as well. Okay, and this looks like it was closed. Person, he's an authorized user there. They went over their limit, which by the way hurts your score. Just so you guys know that. So if you're going to be an authorized user, which is what you guys are, especially if you're paying for a trade line, just be careful because you got situations like this where you think that things may be helping you and they're not helping you. Okay. Now the history was good, but the utilization was way too high. So at some point he could have saw a much bigger potential. You know, so actually he's using his credit card. He's using his credit card better than this person that had than this person that had a $3,500 credit limit. He's using it a lot better. Okay, I wonder why. He must be having a coach or something. Right? All right, so let's see here. This is the auto loan. Okay, I don't know if you guys can see that. Okay, as a portion. Okay, there we go. All right, so I know you guys can see the screen. No big deal. All right, so now it says the term right there says 72 months. Installment shows right there 413, and then of course you got the rest right here. Let's see here, and you guys can see right there. No, of course the payment history. I think that's it. Sorry for the scroll. Hold on. I'm going to go to page number 8. I'll try to break this down as much as possible. So you got inquiries. Gotta love inquiries, right? Someone asked me the other day about inquiries. And here's the deal. Inquiries make up less than 3 to 5% of your credit report. I'm sorry, of your credit score. So, I mean, the whole point of having credit, someone's got to take a look at it, if that makes sense. So please, guys, don't worry about credit. Don't worry about inquiries. I'll put it to you like this. The only people that worry about inquiries are people that don't have the best credit. What's that mean? No, that wasn't mean. It just makes sure you guys' expectations are right. I mean, you know, so I average maybe about 10 inquiries within 2 years easily because the whole point of having credit, someone's got to take a look at it. You know, so, I mean, hey, hard life. All right, so now inquiries here. You guys can see here. Which, by the way, I do want to spend a little time here because this is pretty cool. Did you know that when you are applying for an auto loan or a mortgage loan, I'll say this one more time. When you're applying for an auto loan or a mortgage loan, you can get your credit ran as many times as you want within a 30-day period. The increase will show up on your credit report. Okay. Key word here that nobody reads. Increase that may be affecting your credit score. Legally, they're supposed to show the increase. So, for example, Chrysler Capital, we know that's a car. Okay, around about this time. Okay, so now we know that. Okay, so now that it's in the, remember, if it's a mortgage or auto loan, so if it's within a 30-day period, legally it's going to be on your credit report, as you can see, but it will only count as one increase towards your score. Did you know that? Ooh, bet you don't know that. And you guys are like, he's lying. Nope, you can Google it. It's called the FICO rate shopping rule or rate shopping law. Okay, you guys can look it up. Only FICO has that. Isn't that awesome? Super cool. All right, so now you guys can see, of course, the dates and all that, who the companies were. As you guys see, you know, it says Cap 1, Cap 1. This is auto finance, and this is just for a credit card. Okay, so done with that. And you can see here, if you guys can see here, it says in general, increase contribute to less than 10%. It says 10% is actually less than 5%. You're probably like, well, who's right? Well, I'm right. This is outdated probably. But you guys can look that up. They got it on their site though too now. All right, so let's see here. Ooh, you guys' favorites, collections. I love when I talk about collections because everyone has their own opinion about it. Some people say, oh, pay them. Oh, don't pay them. I'll let you guys decide that. You guys can Google it. You guys can have fun with that. So my clients know what to do. So because I'm helping them. Yeah. All right, so let's see here. Oh, let's go a little bit bigger. Okay, so now these are collections. I had to block out a lot of stuff. You guys know why. Oh, you can see stuff. Isn't that something? Oh, but you guys won't be able to. Either way, it doesn't matter. You guys are more than welcome to pay it if you want to. Now, this is back in January. So this stuff is like, it's not there anymore, but this was back then. And reason why, but I wanted to show you guys some stuff because on this stuff now, it's just like, you know, I mean, why did I go with this one? I think because there's like a little bit of everything that was on here at the time. And yeah, so he's pretty cool with it. So either way, this is you know, just everyone's collection is going to be a little bit different. In this case, they're medical bills, which by the way, that's changing in the new law. But it just shows you, like, you know, the amount, the company. This is it looks like probably Rush Hospital here. Who knows? And then of course the amount, the balance that's right there too. Okay. Then it's going to show you guys a portion of the account number. Okay. And then of course it's going to show you like the date that it was assigned, all that jazz, and the company that it was with. Okay. So either way, as you guys can see here, these are just, you know, collections. Now there is no amount of numbers. I mean, like a certain. Ooh, that was too loud. There's like no amount that your score is actually going to be low because of a collection. Just know your score most definitely will drop because of that. Okay, so a couple things to keep in mind. Okay, so but that is about it because he doesn't have any public records. So that's pretty much it. So let me go ahead and go back to page 1 here. All right, perfect. All right, so guys, that wraps up how to read your FICO credit report. Hopefully that was helpful. All right, I know some people say, well, I can read. Yeah, but you got to read it like a pro. So, but not only that, but no, honestly, but that way you guys can know exactly what, what the lenders are looking for, things of that sort. The biggest thing, of course, is always, the needed. So if you, just so you guys know, to get this report, I'll put the link down at the bottom. But if you guys want to see what the lenders see, then you got to go with the FICO report. It is going to cost you money. It isn't a terrible amount, and they just went up too. Kind of sucks. It used to be $30 a month. Now it's like $40 a month. 3 scores, all 3 reports, and a monthly update with instant alert updates for like $40 a month. And I know there's a lot of other crap that's out here that's charging you guys, but honestly, I wouldn't pay for it if it's not FICO. Like a lot of my clients use Credit Karma, and then we'll get to the experience like on a second, like follow up or something like that, or whatever. Everyone's situation is different, of course. But I mean, I just need to see the report. The score doesn't really matter to me because no one comes to me at like, the 800s. So, and not at the beginning, so now when we're starting off, I should say. But at the same time, I said it to say, if you're going to pay for something, make sure you at least pay for something that people are going to see, because that makes sense. Okay. Oh, I think this whole, this in case you guys are interested, there is, the chat is live as well. I've been getting a few text messages, but I also, let's see here. Let's see here. Live control. Okay, cool. All right, perfect. All right. So yeah, so I think that let's see. I'm just checking something real quick. Okay, cool. All right, we're all good. All right, so yeah, I think I answered for the most part. I answered most of everyone's questions and stuff. So yeah, hope that's pretty cool. Okay with that. And I'm just going to my phone right now. Yep, answered that question. Yep, answered that one. Yep. Okay, cool. All right. So guys, that's pretty much it. Please, man, I hope this was like helpful. And we're going to do Credit Karma as well. Okay. So don't have, man, I want to find one that, because he did have a Credit Karma report, but I mean, everything's the exact same. But I mean, how to read them are a little bit slightly different. I mean, it's about, honestly, the science to it is the exact same, but there's no, like all these scores you guys are seeing, you won't see all those scores, not at all. Okay, you're just going to see like, just the 2 scores that you see. Well, technically 1 for each bureau. And but they, of course, they don't have an auto lending score or mortgage score because unfortunately nobody uses them for mortgages or auto loans. Okay, so that's why they can only show you 1 score, because that's what you see is what you get. Okay, so hope you guys love this video. I'll leave it up there because again, that gives people, I'm sure people are going to be searching for how to read a credit report. Hopefully this was helpful though. And if you like more videos, if you want to see more videos like this, please subscribe. Please share this with people that you probably think would be a benefit to. Like it. And thank you guys so much. And I will keep you guys posted when I do a Credit Karma report. But I mean, that's if you guys really want to see one. I mean, you guys see, Credit Karma all the time, but I think that FICO is something that people don't necessarily see, so I may or may not do it. If I do it, I'll keep you guys posted. So, but yeah, thank you guys so much. You guys have a great night. Talk to you soon. Oh, by the way, sorry. If you guys have any questions, comments, or concerns, you guys can always email me to info@the850club.com. You guys can join the blog as well. That's at the850club.com/blog. Follow me on YouTube, all that jazz, social media, all that fun stuff. See you guys later. All right.